Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Wednesday, June the 14th, 2017. My name is Doug McKay. I am founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and we drill down to our trade levels, our targets, and our main hypotheses for the day. We do create multiple hypotheses in order to have a plan in place. Therefore, we wait for the market to tell us what it's doing and then execute the plan that best fits the market. We do not try to predict the market. We try to have a plan for whatever the market is going to do. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. This is not a commercial venture. We do everything live here in GoTo. Then we do live trading analysis during the course of the RTH trading session. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence and your own trade plan. All right, so taking a look at yesterday, well, we had another day of lower probability, and I haven't gone back. I meant to do it last night and I forgot to do it, to check to see how many low probability days. I think it's 6. I know we've had 2 days where we had a 3% probability of not breaking the Globex high or low, and I know we had 2 normal days, so we had 2 probability 3% of not breaking the IB high or IB low. We did that not yesterday, but the day before again, so that was a third one, so that's 5. And then we got a neutral extreme, okay, which is only a 16% probability yesterday. So Hypo 1 was an open auction out of range, a move down to test the range or into the range, and then looking for responsive buyers to come in and take us up and go challenge those highs. It was Hypo 4, I believe, that was a open auction out of range and then go sideways, okay, creating new balance above, and that's exactly what we got. And we did break the IB to the low, and we did break it to the I side, and then we closed outside of the IB, so it is a neutral extreme. It is a neutral double D. I love double D days because there's something to lean against. Of course, we could open up above range again and not even come down and test this double D, but something tells me that we'll probably test it today. So we did close at 24.38 near the highs on a neutral extreme. Always remember that when you close on the highs of a neutral extreme day, okay, or a trend day, you're looking for continuation in the Globex. And the Globex did open up just in range, failed to get out, came back down, tested the double D, LVN, bounced off of that 35.25, and then rotated us up and got the continuation. And we pulled back on the news to the VPOC of the session, and then we bounced, accepted value higher, and then broke out and came within 1 tick of a new all-time high in the September contract. Inventory is about neutral to about 60% net positive, but the key is we're trading above the prior day range and value, and that's more important. So let's just take a look at the news because it is Fed Day. Welcome to FOMC. We did have news this morning, which I think could have been the more the better trading news because of the fact that I think a lot of people have this rate increase priced in already, but we did have CPI and core retail sales, and they both were a miss, and that was the big move down. the buyers immediately stepped back in and bought this up. 9:30, we've got CV leading index from Great Britain. 10 o'clock, we've got business inventories. The next big one will be crude inventories at 10:30, and then of course we'll be waiting for the FOMC statement and the federal funds rate. And then this one also has the press conference. I think the press conference is going to be more important because that's where they're going to lay out, and have language in terms of, how many rate increases they're looking for and how they're going to handle, the clearing their books as they say they're going to do. And then later in the evening, we've got some other news that could move gold. So we'll be looking at that 9 o'clock and 9:30 time for gold. And then tomorrow we've got unemployment claims, which will be big as well, hopefully. And so into the end of the week, we've got some stuff that's going to move the market. So I always like to start my day with a basic candlestick chart, looking at the macro to micro. We want to see where we are within the trend. Obviously, you can see the trend is nowhere near being challenged or violated on the monthly. We're at all-time highs. Weekly, same thing. We're coming up. We're above last week's open and above the prior month high, and came up, and we're only trading a couple points below the all-time high at 43.50. We missed it by one tick in the Globex so far. Going to the daily, you can see that we came down, challenged the trend and took it back, and we're getting continuation into the upside. Going to the 4-hour, you can see that we had a FUBAR Mr. Sneaky tech gap. It came down, it didn't quite close the tech gap, and then it bounced off, and we've got continuation pattern. Hold on one second. And then going to the 1 hour, you can see came down and tested the 20 and broke back above, and continuation up. 30-minute, same thing, came down, tested the 20 and get continuation. 15-minute, trend is still, the trend will be challenged at 24.41 area. And then the 5-minute, we're above the 9 and the 20, creating a little bit of a technical gap. Likely come back and test this and then get some continuation. All right, so taking a look at the big picture, the big structure. Okay, we came up, we created this this 5-day balance. I noted this yesterday that the VPOC shifted from that 30.25 up to 34.25. So longer time frame value shifted up, and we accepted that value, and we rallied into the close, and we've got continuation up. We're above the 6-day or 7-day value area high, and looking for continuation. We're going to be opening up. Well, we've still got some time. We could come back into the range, but we're going to be opening up with another gap up, and probably see some continuation depending on the news today. So taking a look at the overnight, let's get our numbers. Now, we could go up and make a new all-time high, but right now our Globex high is 43.25. One tick above below the all-time high on the September contract. Doesn't look like we're going to get a VPOC shift. 39.50. One tick above yesterday's range high. Overnight low. 35 right off of the LVN and the VWAP. And there's really no other information that I can glean from there, so that's all we need from that. So levels, well, this is going to be easy. Range high, value area high, double D. This is going to be our over underline. And then value area low, and the low and the naked close. We still have that naked close that we gapped over. We did not take it out yesterday. We got within one tick. We got a naked close at 28.50 and 26.50 with the range high at 27.50. And then below that, it's going to be 24.50 and the 19. Oh, 19's already in there. Okay. In terms of range capabilities, our 20-period full session ATR is running at 16.13. So off of the low of the night, our upside ATR target is 51.25. And our low side off of the current high of 43.25 is 27. So just right in between these two naked closes. All right, so let's go over our hypos. Our hypos are going to be pretty clear. First of all, I want to check to see if we have any measured moves here on the zipper. Remember, we've been doing this a lot lately. We had this zipper measured move, and if I draw this zipper measured move in, we hit it to the tick in the overnight and then pulled back. I hate when it does that. I can't see. It's going to be right there. So our zipper measured move was to 42, and we got to 42.25 before we came off, and then it came back off on the news and then pushed back up. So we've been doing this a lot lately where we put this late day zipper in, and then we take it out in the Globex 3 times in the last 5 days. I think that's happened. So there's no more. The extended zipper on the extended target on this is 45.25. So just pay attention to that. But other than that, we didn't create another zipper yet. We could create one right here if we come up and print 43 again, and then we can draw that one. Well, let's draw it just to see what the potential target is. It's not going to be valid until it is actually hit, but just to see. So that takes us up to 46 with the extended up to 47.75 if it sets up. So hypotheses, excuse me. We're going to be opening up just outside of range, just outside of value. I don't know if we'll come down before we still have 30 minutes to go. So I'm looking for an open auction out of range or just inside of range, but I'm looking for responsive selling moving down into the upper distribution and coming down to the double D LVN. I love double Ds, okay, because we're likely to get the first rotation off of this LVN if we come back there, and then I'll be looking for a rotation back up and a move and a continuation up. That is hypo 1. Hypo 2 is an open auction out of range or just in range. If we open in range, a breakout and a failure to get continuation, have responses, buyers come down to the double D, bounce off of it, come back, break through it, and come down into the 43. and then chop around coming into the FOMC news. Everything only goes up to the FOMC news. Based on FOMC news, we can get anything. So these hypos only go up to that news. And then hypo 3 is an open auction out of range. Failure to close the gap or bounce off of the range high, not leaving the naked close alone, and then a rip up into the 50 area and go sideways into the FOMC news. That is hypo 3. Hypo 4 is open auction out of range. Failure to get above the all-time high and then rotate down, chop around at the LVN, fail, come down, and come back into the FOMC down here around that prior microcomposite VPOC, which was at the 27.25 area, and come into the news from there. Not going to bother with, there's a couple of alternative hypotheses, but it's not worth going over right now. Very quickly going to take a look at gold. One thing I wanted to show you on gold, we talked about it yesterday morning. I want to talk about it again, is the longer time frame. Let me just do it here because that's easier to do. We were in this downward channel where we were failing to get above the 9 EMA. And I told you yesterday morning to watch the 9 EMA, and if we got above it, that would probably signal a change of trend. It creates choppiness, which we did get in gold yesterday, but once we broke out, okay, you know, we've got back above, we retested it in the Globex, and then they broke out, and now we've got a change of trend as a possibility. And we have a naked cross all the way up here at the 1289.40 area. So likely get a bit of a pullback because we're going to get a FUBAR Mr. Sneaky here with this technical gap, but the change of the trend is the more important. You can see once we got there, we chopped around, and then now we're breaking out. And you know, this is a classic longer time frame trend change that you have to learn to look for possibility of movement in the other direction. Taking a look at the gold composite. You can see that with the change in trend, we shifted the composite VPOC, which was down at the 58.10, up to the 69. We came up yesterday, accepted that 69, and then we're getting the move back up in price discovery to the upside. You know, 30, I talked about this the last couple of days, that between 38 and 42 is a larger OTF harmonic rotation. The average rotation, okay, down is between 38 extended move is between 38 and 42 is generally where I'm looking for the possibility of a change of rotation. Now we've got a $20 to almost a $21 rotation. We're coming up to a key LVN right here at 80, 90, 81. If we get above that, look for continuation up towards the 85 and possibly even up to the 1290. Now, typically, Fed rate increase isn't really good for gold, but I think with the flight to safety that gold is not going to be affected to the downside as much. We'll probably get a wiggle to the downside, but we're likely not to get a big sell-off in gold now that we've got price acceptance at the 69 and the move up. If we fail to get above this 81, then likely going to come and chop around in this 79 area, 78, 79, with a possible move back to the 70 area. Again, I wouldn't put that out of the realm of possibility, but right now, watch for the breakout above 81 and continuation to the upside, if not chopping around the 78, 79 area. That was an area we were chopping in previously. So that is it for my pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.